Welcome back, everybody. We did a video recording earlier that had some background music that was causing some problems, so we're going to re-record a similar session, a little more organized this time. But we're going to talk about this time the three biggest drivers that I see that's causing the current Bitcoin sell-off, but the massive opportunity that this is going to give us in the future. I had Grok help me come up with a script. As you can see here, I told Grok I'd like to cover the three reasons that we're going to discuss here. First of all, the Bitcoin halving cycle dynamics. I see a lot of people continuing to fade the halving, and I think it's a bigger part of the dynamics that people think. I'm going to show you some numbers on that. The global liquidity tightening, there's a lot of information out there that really suggests that we are heading for credit stress. And liquidity will be tightening because of things like counterparty risk, the banks under credit stress. We'll talk more about what liquidity means, but fundamentally it's banks' ability to, willingness to lend, really. And then thirdly, Bitcoin Core version 30 concerns, especially with OGs that are concerned about the health of the social layer of the Bitcoin network. But Grok here wants me to remind you that apparently Bitcoin's down about 40%, wiping out a huge amount of market cap and leverage, and it's really a confluence of drivers that are causing this. I want to start on the topic of the halving because I can continue to hear people fade the idea that the halving is irrelevant. I hear people all the time saying the halving is irrelevant. Well, if you look at this chart, I mean, the 4-year cycle looks pretty intact to me. And, you know, multiple markets go through similar cycles. There's a 4 to 5 year liquidity refinancing cycle that often drives a lot of this. It's interesting that the 4-year halving cycle is synced up pretty well with those 4-year refinancing cycles, which are really, in the United States, they're rooted in the election cycles. That's why we have a certain refinancing cycles around those times as well. But if you do the numbers and you actually crunch the numbers on the effect of cutting the Bitcoin supply from 12.5 to 6.25 in 2020 rather, from 25 to 12.5 in 2016, and then 6.25 to 3.125 in 2024. Let's just look at the numbers on this real fast. I had Grok help me build a graph of this. But you see, in 2016, at the current price when the halving happened, at around $600, we'll call it, the daily supply of Bitcoin was around $2.4 million of new supply being issued in Bitcoin mining subsidy rewards. And after the halving, because of the price of Bitcoin, that dropped to we'll call it $2 million, which is basically a cut of a little over $1 million, $1.2 million of incoming supply that had to be absorbed by the demand side of the equation in the market. In 2020, the price at halving was around $8,800. That was $16 million of selling pressure per day before the halving and $8 million of selling pressure per day after the halving. So that was a much more, even though the number of Bitcoin being cut in half in the halving is smaller because the price was so much higher coming into the halving, of course, that made a huge difference in the total supply of Bitcoin coming into the market that had to be absorbed by the demand side. Or another way of putting it, there's a whole lot less supply that had to be purchased. That meant it was basically the equivalent of an additional 900 Bitcoin a day being purchased. And then 2024, coming into the halving, we'd hit that all-time high before the halving, rooted in, if you back up, what really started this cycle was BlackRock filing for an ETF. And when they filed for an ETF, that signaled to the market that an ETF was definitely coming. That gave us kind of a double bullish catalyst along with the halving for this whole bull cycle. But when we look at the price at the halving of 2024, Bitcoin was $64,000 roughly around that time, which was $57 million a day in new Bitcoin being issued in miner rewards. And then after the halving, they cut that in half to $30 million. So the net effect, the 2016 halving took a $1 million worth, $1.1 million worth of sell pressure off the market every day. The 2020 halving took $8 million, and then the 2024 halving took $30 million of sell pressure off every day. So I think people are fading the halving because the numbers are getting smaller. There's more floating supply, and those are factors, of course, but they're not really thinking through the daily supply coming on, the impact of the daily float, the daily issuance, the daily volume that has to be absorbed by the market every day. That is something that we've never experienced. There's no other asset that quite has this sort of dynamic, right? The price of gold and silver goes up 50%. Well, there's going to be a lot more supply coming online. We're seeing that now in the metal space. The price of oil shoots up to $200 a barrel. There's going to be a lot more oil coming online, so forth and so on. But Bitcoin, no matter what, it's price insensitive, right? So the halving does matter. I don't want people to lose sight of that. And this supply shock does drive some price appreciation, which then is followed by, when you have rapid price appreciation, you have speculation on top of it, and then you get, a speculative FOMO top. And they've been rolling tops lately. Now I want to highlight, I was asked on this post here, you can see I was asked if I was acting on it, and I said yes. Back here, you can see back in September, when we lost that trend line and the 50-day moving average and got rejection from it, I started aggressively exiting my positions. Now, yes, it's nice that we had a confluence of like what the halving was doing, what was happening with the halving cycles, and the duration of the time left in the bull market was likely up. But this was a technical signal. This was a technical sell. If we go look at the chart, we'll look at the chart here. You can see the structure of the last bull market and this bull market are very, very similar, right? And when you have this sort of structure, this very long 200-day moving average uptrend, when you have these big detachments of the 50-day moving average and price from the 200-day, that 200-day is going to be a magnet and pull price back to it. So if nothing else, when you lose the 50, you can look to sell and expect to buy back at the 200. But in this case, with all the loss of momentum we had coming into this, the odds of a bigger rollover were likely and obviously have played out. I'm going to reorder some things here real fast, but if you see here, I posted earlier in my Discord a whole bunch of just timing charts, but you can see the remarkable timing, and so far the Bitcoin bull market came exactly. The peak came pretty much exactly when it was supposed to. It may be a self-fulfilling prophecy. We'll see how a likely rally from a liquidation of these recent lows, a bounce. We'll talk about that bounce in a little bit. But we could be looking at a pretty predictable bear market bottom too again. But I've got some thoughts on, unfortunately, I think the next bull market is going to be lackluster for a lot of reasons. But if you look here, the timing is just spot on. And if you see here, so let's move on to our next topic. But before we move on to the next topic, I just want to briefly interrupt the video and say, I've never solicited my Discord members or X. I've never sold trading accounts or anything of that nature, so I've never really tried to make money. But I now have an investment. I've taken some of the Bitcoin profits that we've had from this past year, and I've diversified my Bitcoin into real estate. So this is the first of my real estate purchases, given the tax advantages of short-term rentals. My first purchase was a beach house, a oceanfront beach house in Crystal Beach, Texas. And really, when you look at from an investment perspective, I didn't want to give up my Bitcoin for something that wasn't also scarce. So oceanfront property as an idea for you guys is a scarce asset. But I put the booking link here in the video description below, and if if you're in the area, you want to come out and have some friends and come stay in the house, filling up this house would be super helpful to me and support the channel. Enough advertising. Moving on. All right, so yeah. As I said here, I was a little bit upset when I posted this. But, as I said back in September, we had one more, kind of what I'll call a fake Binance-induced rally to liquidate all the shorts after this. And then we had a 126K top. But I said, assuming 124K was the top, we enter a bear market, you can thank Bitcoin core devs for their idiotic spam enablement caused by Core V30 for the lower than expected top. So I contend that Core V30 was largely why we saw a lower top, along with global liquidity. I think both of them. I think Bitcoin is a leading indicator of global liquidity. We'll talk about that. But the Core V30 issues, I think, are a significant part of why there's a lot more selling pressure from OGs, from long-term holders. And I also believe this is going to drive potentially the biggest crypto winner we've seen yet. Prior Bitcoin bear markets were driven by external events. The FTX blow up was external to Bitcoin. As bad as it actually wasn't a part of the Bitcoin core protocol. But this time, the shepherds of Bitcoin, it should be Bitcoin Core, the Bitcoin Core development team, and they have gone rogue, from what I can tell, by opening up op return from 80 bytes to 100,000 bytes or 100 kilobytes, which allows just a massive amount more data to be both that nodes have to move around the network because the change was to what's called mempool filter policy, and so now instead of filtering these transactions and not relaying them around the network, now these nodes that are running that version of software newer are going to be relaying very large anonymous blobs of data around the network, which any random miner can pick up and put in blocks and then force node runners to have to store whatever that potentially illegal content was put on the blockchain on their node, which is going to have a whole host of ramifications, of course. So we'll get back to that topic here in a minute. I'm going to talk about what the network's going to do about that, what we're going to be doing about that, and what the opportunity is. You see, it's probably my most viral tweet of the year, but this shows, roughly when Bitcoin Core V30 was released, and then it's been basically straight down since then. Now, I do think, again, Bitcoin leads liquidity, and I do think liquidity is drying up for a number of reasons, so we're going to talk about that, but you can't really deny that it's likely that between Bitcoin Core V30 issues with all the OG whale selling plus the liquidity dries up the buying side, right? So you reduce demand side. So you've got both sell pressure and less demand. There are also people, because of Core V30, there are several people, not many, there's not a whole large number of people, but there are a few that would be buying Bitcoin that are not because of these concerns around the health of the network. Now let's shift over to global liquidity and what I believe is going to drive a lot of that liquidity drying up is just general credit stress. And so if you look here, Michael Howell's they call him the godfather of liquidity. He's done a couple of interviews recently showing that on his kind of liquidity cycle, and the reason this orange line exists and it's kind of very predictive is because of the debt refinancing cycle. So there is a 4 to 5 year debt refinancing cycle that markets tend to follow, and we're at the top and starting to turn over of the prior liquidity cycle. So when Michael talks about liquidity, what is he talking about? Well, he's talking about the bank's willingness, the banking system's willingness to lend at favorable interest rates. So what happens when there is credit stress? That means that banks have largely probably been lending to they thought were good loans, and now they're starting to readjust and discover that these loans that they thought were good are actually maybe going to be bad loans that they're going to have to write down. So if in the face of having to write down, basically they know they're not going to get paid back on a lot of these loans, so they're going to be more cautious about doing similar lending. They're going to start to increase the spread between of the interest rate that they charge more interest rate. They're going to be very picky about who they lend to, and that means that it's going to be more and more difficult for more and more entities to roll over their debt obligations. And so when in the markets today, there's literally hundreds of trillions of dollars of debt across between sovereign debt, corporate debt, and personal debt, and much of it really none of it can be fully repaid. The system will not operate if all these loans had to be paid back, right? So it's there's a constant debt refinancing cycle that goes on. And whenever all these entities go to refinance every few years, of course, again, if there's bad loans on banks' balance sheet, they're going to be very cautious about lending. They have to protect their moving forward. They have to protect their balance sheet. So because of that growing counterparty risk, they're less willing to lend. And whenever entities, whether it be sovereigns, again, corporates or individuals, cannot refinance their current debt, whether it's individuals trying to refinance maybe they maxed out all their credit cards and they're trying to refinance $30,000 of the credit card debt, and there's nobody willing to do a debt refinance loan to lower that interest rate. They have to start paying those massive credit card bills, right? Same thing happens at a business, corporate level. The same thing happens at the sovereign level, and sovereigns all over the world can get into issues where they can't really serve. So what has to happen if you're forced to pay all your credit cards at full value with the full payment, and start trying to pay those down, especially and you can't refinance that, well, you have to come up with the money somehow, right? Either for an individual that work multiple jobs, but oftentimes people end up having to sell things to service those debts. And that's the same thing happens market wide. Whenever there are liquidity stresses, whenever there's a credit event, right? So whenever credit starts to dry up, and there's been multiple indications that credit is definitely drying up now. Many high stress news events like Tricolor and these others that have gone under already. So we're seeing this take effect. So what happens is banks are not willing to lend again, and it causes all kinds of entities to sell assets. And one of the biggest assets that gets sold when you talk about on Wall Street, corporate, stocks oftentimes get sold. Assets like gold, Bitcoin, these assets have to be sold to service debts, and that's what caused all the major pullbacks in the last 100 years, really. I didn't do this in the last video, but I do want to show you this chart here. So 2020 is a blip on the radar now, but this 2000 peak, and if you look at this chart, I mean, it's just parabolic. This is actually not healthy. I think a lot of people have been trading in this environment thinking this is normal. This is not normal. But remember that the common narrative is going to be, well, the government, the fiscal dominance, and debasement trade, right? Everybody's talking about fiscal dominance and debasement trade. And we've been talking about that. I can show you. Actually, I just paused the video to go back and find it. This is from early 2023. This is when everybody kept saying the market was going lower. This was at the time NASDAQ was $13,000 when I posted that. Let's see, what is NASDAQ now? 25,000. So I was posting this down here at $12,000 NASDAQ, right? So I'm not just making this. What I said is, at the time most people were bearish and I was turning bullish. I said, okay, it's clearly from a technical indicator, and I gave a bunch of reasons why. And you see here, I said a big difference between now and 2000 and 2008 is debt to GDP, basically fiscal dominance, right? And I talked about fiscal dominance. Unemployment was still low. The Fed was coming to an end of what they could do. And it was actually reversed, right? Because the Fed had increased interest rate, it was actually increasing the government's debt liability. So at the time, the market was thinking that we're heading for a bigger correction. I was saying back in 2023, no, we're definitely heading higher in the interim because the interest expense was blowing out and it was adding massive liquidity to the market. So yeah, back in 2023, I was saying, back here at $12,000 NASDAQ is when I was saying that was the time to be bullish. Now I'm telling you, up here at $25,000 NASDAQ, now is the time to be bearish. Why? So the debasement trade that everybody talks about, yes, it's true that the fiscal dominance is a thing right now. But there are many large factors at play. And remember, every dollar basically that comes into existence gets lent into existence. That means that it has to be paid back. And what endures, so when a bank, let's just back up and cover this, right? When a bank lends you money for this house that I just bought, my beach house, right? I put 25% down. The bank gave me the rest. Did the bank have that money sitting in a vault somewhere? No. They just created it out of thin air, and that is now in the system. But that capital that I took to buy that house, I have to repay that still. And what's going to endure after I service that debt, assuming I fully pay that house off and I service that debt, which unlike most of the market, that's what I'm planning to fully do, right? But when I fully pay off that house and service that debt, that money will actually be destroyed as I pay that back. As I pay my principal back, the money is being destroyed. What's being left over is the interest rate. So the interest rate is what endures. But that debt has to be serviced. So every dollar, let me just highlight this, every dollar is basically lent into existence. Dollars are lent into existence. Right? And that means they have to be paid back. And if the ability to continue to lend dries up, then debts have to be serviced. So while, yes, the government is spending money adding liquidity, the Fed has made some changes, SLR exemption changes for the banks, and the Fed themselves are doing some short end T-bill purchases to help add liquidity on the short end to help with the repo market issues they've been having lately. These are all dropping the buckets. The total, roughly, it's about $100 trillion a year of debt that has to be serviced, I believe. Right? So it's about $100 trillion a year that debt has to be refinanced. If you think about the U.S. government has $38 trillion in debt. Much of that has to be refinanced every year because they've been doing so much on the short end, right? But you look at all the debt that has to be serviced. It's at least $100 trillion a year. I don't have a good figure on that. I'd have to ask Grok. But that's a massive amount of money. And if the ability of banks to lend and refinance and roll that debt slows down, then it can be extremely large amounts of capital assets that have to be sold to service that massive amount of debt, right? So while yes, the debasement trade is true over long periods of time, while yes, we are in fiscal dominance, there are acute points in time when too many bad loans have built up in the system and banks quit lending and then assets have to be sold to fund to pay back those debts, to service those debts, service those payments. So that's the global liquidity in a nutshell. And there are many, many indicators that we are definitely drawing up on liquidity. And back to the Bitcoin chart, my thesis has been for a long time that Bitcoin leads in liquidity. So while there's extra sell pressure from OGs because of the Bitcoin Core V30, ultimately what's going to give this sustaining sell side pressure is the buy side drying up, right? So really what's happening is we have the Core V30 part of this is sell side pressure, right? So you have sell pressure from OGs. The liquidity cycle drying up is buy. It's demand side destruction, right? Because as liquidity dries up, there's less money available to buy speculative assets or buy any assets of any type, right? And the 4-year cycle really probably just it pushes speculation to push price, and because of the supply shock higher than it would go, and it causes these boom bust cycles, right? So this is a boom bust phenomenon. This creates that boom bust. All right, so now we're here. Now that we're here, right, and we see on the chart, I'm going to show you. Let's focus on Bitcoin for a little bit. If you didn't sell, I'm just going to go over this real fast. If you didn't sell up here, right, I've been warning for a long time that somewhere up here is right around the top. I've been warning this is the top, this is the top, this is the top, screaming it from the rooftops. But even I didn't sell like all my Bitcoin or anything, right? I closed trades. I took a little bit of profit. I hedged. I did some hedging for a portion of my position. But I'm still, even I'm caught off guard by the severity of this pullback, the 40% pullback in this nature, this time frame. I thought maybe we were going to have a slower bear market because of other dynamics. The fact that it was a lower bull market, maybe it was a slower bear market. But too many things are building that it's going to be a very severe bear market for a number of reasons. But let me just give you some analysis on what I think is possible for those of you looking to exit. I've got 97,000 as a high possible bounce area, but you see when price breaks down out of a significant level, this trend line was created off of the yen basis trade blow up back in early 2024, then the tariff tantrum sell off. When that trend line got violated here, this is a good indication that we have a serious problem. We're probably in a bear market, right? But oftentimes what happens is price likes to come back to the very breakout level where it broke down significantly to retest, right? So I've got right around 97,000, I think. And if you look at liquidity, I can maybe pull it up before we're done. But you can see here these lows, a good place to potentially target. As this 200-day moving average pulls down here, as the 100-day moving average pulls down faster, if price can liquidate these lows, which I think is going to happen, in the high 70s, there's a good chance we actually get a bounce into early next year to retest this breakdown level, and these moving averages should come to meet all this. Like 50 should curl up with this, and we should get a nice confluence of moving averages, hopefully right around 99, 98, 97K. And that would be an opportunity to look to take some more profits if you weren't happy with how much profit you did take thus far. But I'm sorry to tell you, I'm don't know that I'm calling for, but I see the very high likelihood of a prolonged bear market. And so, I do think that the halving will fade over time. The 4-year halving boom bust cycle will probably fade change over time, but I'm afraid it's going to change in ways that people don't like. And what I think is going to happen is instead of having a more traditional 4-year cycle, or this not being I think what a lot of people are hoping for is the 4-year cycle is not dead, and this is going to be an extended cycle, and we're going to resume up to $150,000 or $200,000 next year. I think the opposite is going to happen for a number of all the reasons we've laid out so far. I think this is actually going to be possibly the worst bear market in Bitcoin's history. I can personally see Bitcoin trading back to $30,000, maybe even below for a brief period of time, but I can see it pulling back significantly for a number of reasons, and eventually we might get a cycle peak right on time. To go back to these peak charts, I mean, we may have a tradable bottom late 2026 that gives us a bounce, but I'm afraid that we're going to have a lower high bounce next bull market, and I'm going to explain why right now. The issue lies in the Bitcoin Core V30 proposal, or Bitcoin Core V30 changes that's creating a lot of issues on the with the network, right? And there's a Bitcoin improvement proposal that everybody needs to be aware of, and this is where the opportunity comes in. If you're following this channel, work with us all the way through the bear market, I think you're going to have the best potential buying opportunity in maybe a lifetime. But Bitcoin improvement proposal 11, I put 100 on here, sorry, 110 is a Bitcoin improvement proposal. This proposal, along with another proposal called the CAT that's floating around out there, I'm definitely supporting Bitcoin improvement proposal 110. I'm still out on whether I'm going to fully support the CAT or not. There's a lot of implications here, but Bitcoin improvement proposal 110, what it's going to do is it's going to lock down the all this spam at the consensus level. So the current issue with core version 30 is they've opened up very large op returns, those 100 kilobyte uploads, to be able to both be relayed around the network, and then for any miner to pick up and put in the block, and then force once it's put in a block, all node runners have to download that and keep that on their local hard drive. So you can't filter that out even if you want to, right? At once it's in a block. Okay. So that's a huge issue. BIP, and then also we have similar issues from exploits from inscriptions and Taproot, and then also from SegWit with the witness discount. So both of these allow, both those changes have allowed different forms of spam and data to be put on chain. So what Bitcoin Improvement Proposal 110 is going to do is lock all that down to where at the consensus layer, we're not going to allow spam data, right? Non-monetary data. Spam is simply any non-monetary data. Not if you're not moving a UTXO from one wallet to another fundamentally, and then some other basic functions associated with that, that's non-monetary data, right? If you're storing random data on the blockchain, it's not going to be allowed, right? So that's going to block that for 1 year to start, right? So that's fully backward compatible as well, but it's going to be a 1 year temporary restriction on that. Of course, that can be extended after if everything goes well. And I'm definitely supporting that one because Bitcoin has got to return to the original ethos or it will fail. I posted this here earlier just as a reminder to everybody. What Satoshi envisioned was peer-to-peer electronic cash, right? And what do you do with cash? You don't write pictures on cash. Nobody sells paintings with cash. Like, you purchase things with cash, right? Peer-to-peer cash is, I want to purchase something from you, I pull out US dollars or whatever fiat cash I have and hand it to you. It's a peer-to-peer transaction. I'm using my monetary asset to purchase a good, right? That's what this system is supposed to be. Purely cash, right? So anything outside of cash is not sustainable for us to support on the network. So this Bitcoin proposal is going to lock that down. Now what the CAT is proposing to do is actually to make small transactions that have a lot of spam associated with them unspendable. These are already pretty much unspendable transactions. They're called dust UTXOs already. You really can't spend them. The transaction fees cost more than the value of these UTXOs. So we're looking at freezing those. There's some confiscation risk here, and so I have to really think through game theory of is it worth it or not. I personally think it's probably actually worth it, but I really need to think that one through before I say I'm going to support it. But what's going to happen, because these proposals are out there, what is going to happen in the next year. Bitcoin Improvement Proposal 110, I believe, is supposed to go live still February 1st of 2026. Okay, let's walk through what happens when that actually goes live. All right, so the moment that goes live, and it's going to be a what's called a contentious user activated soft fork. That means a subset of the network, myself included, I'll be running a NOTS node with these new BIP 110 by that date rules. And at block height, let's just pick a block height. I think the block ran over to my personal node here to grab. We're at block height currently 928,64,000. Okay, so let's call it block height 930,000, just as a. So let's say it'll be probably higher than that by the time we get there. But let's say it's 930,000 block height. And I gave this example in my Discord earlier using the exact same block height. But let's say at Bitcoin block height 930,000 is when the chain actually forks. Now what actually happens is when we all run these new more restrictive rules, the current chain, the current Bitcoin Core V30 nodes are actually backward compatible with these rules. And so the fork won't actually happen until there's what's called an offending block. When the current Bitcoin blockchain mines a block with data that offends, that's not consensus valid for the BIP 110 Bitcoin nodes, then we enter a fork because they now have block 93,001 and the fork network is still sitting on 93,000 because that miner did not mine a block that's consensus valid on this chain, and that's when the soft fork actually occurs, at the first offending block. All right, so there will be a grassroots effort. It will be a minority of the hash power will be on this second chain, but eventually this second chain will get a clean 93,001. So there will be. I'll point my miners at it, and that'd be great. Maybe I'll mine a block and get a bunch of Bitcoin to be in the new chain. That'd be fantastic. But nonetheless, a bunch of us will be mining on this chain. And until the first difficulty adjustment, this chain is going to have a lot more hashing power. Will probably outrace the new BIP 110 chain by quite a bit, right? So this will be much slower to add blocks. But once the difficulty adjustment happens, they'll be moving in parallel. I'm going to guess, let's just say 70% of the hash power and network stays on the legacy side and 30% moves over here. Okay? Whatever it is, it's going to be kind of irrelevant. But there will be plenty of hash power that moves over. But we will have a fork. We will have 2 Bitcoins. And now, here's the thing. Let me remove a bunch of this drawing here. The network, or people in general involved in the space, are very conditioned to think about forks of Bitcoin as very negative, right? The fork is the one that usually dies. So, for example, we go all the way back to Bitcoin Cash, BCH, and Bitcoin Satoshi Vision are 2 examples that I can think of off the top of my head here of forks that went horribly wrong, right? But these forks were adding a bunch of basically big blockers, right? These were big blockers. They were trying to add a bunch more features, capabilities, and large blocks, stuff a lot more transactions in. And these ultimately obviously failed because they were decentralized, spammy, large blocks. Well, if you look at the Bitcoin Core V30 chain that we're going to have after the split, it's going to be a similar spam-filled, and it's not technically big blocks like these were, but it's going to have a lot more junk data associated with it. So it's going to build up over time as these 2 forks develop. Your legacy spam BTC chain is going to have all kinds of junk spam in it, and then you're going to have a clean monetary only 110 chain that's going to be building over here on the side. Eventually, what will happen is exchanges will start to list the new 110 chain. Let's just call it 110 for lack of a better term. I don't know what they're going to call it, right? We don't know. This is all things that'll have to be figured out in the future. But eventually, exchanges will list both BTC and 110. And then users are going to have a choice. If you had Bitcoin and cold storage before that 930,000 that we talked about, they are the exact same chain before 930,000. They are the same Bitcoin blockchain. It's after that when the new consensus rules started to be implemented by the 110 chain. After that point, then they fork and they're now different. So if you had Bitcoin, say you had 1 Bitcoin before block 930,000. You will have one Bitcoin on the legacy spam BTC chain, and you will also have one Bitcoin on the 110 chain in the legacy through the legacy transaction. So you will maintain both Bitcoin. You can just hold your Bitcoin if you want. Users will probably at some point have the option to sell one or the other. And my fear is that many participants are going to sell the wrong chain. They've been conditioned to think that 110 is just another BCH or BSV, and they're likely going to sell that to buy BTC, the spam chain, right? So that's what's probably going to happen. And let's say at this point, this is going to cause mass confusion. Let's say at this point in the pandemonium and the sell-off, we've got $30,000 spam coin, and people are now dumping this brand new coin that's just come on the market, and it has a price of $5,000. Well, that's obviously a huge opportunity for us to believe in this side. And I think it's pretty much inevitable that this side is actually going to win, and this gives us the huge opportunity. Because if you can sell the $30,000 coin, right, if you have cold storage Bitcoin, you're going to have both. You can move your Bitcoin, your legacy Bitcoin, onto the exchange, sell, you can keep your one Bitcoin on this side, and you can sell this one and then buy additional Bitcoin on the new chain, right? And that's going to give you hopefully the ability to sell, hopefully you've taken profits well before $30,000. If you take profits now or above here at 90-something thousand dollars, just think of how much $5,000 as an example. I don't know, not a crystal ball, it's not financial advice. I don't know what the price is going to be, but it's going to be cheap, right? You're going to have the ability to buy a whole lot of 110 coins, probably, potentially, in the not too distant future. But now let's go back to why the 6-year bear market. I do believe this is going to cause a 6-year bear market, and I'm going to highlight this way. For the sake of time, I'm going to remove all the drawings. You guys will get the idea here. All right, so as we enter this bear market, let's say we do bounce like we think here, and then we start to go to a normal bear market with the bottom in October. Now, somewhere around here, the network is going to figure out there's going to be news articles somewhere in here that there's now 2 Bitcoin. You're going to see people freaking out. News articles, CNBC potentially even talking about there's 2 Bitcoins, there's a Bitcoin fork, yada yada yada. What should you do? There'll be all kinds of talking heads talking about this, right? So it's going to be a big news item. So people are going to now sell. The network is now divided, now split. There's 2 halves, and people are going to continue to sell. It's going to cause a lot of sell pressure, right? A lot of fear coming in the market. And let's say that fear of 2 Bitcoins being out there drives the legacy BTC chain down to that $30,000 bear market low. There's a couple things that are going to happen here. First of all, treasury companies like MicroStrategy are going to be massively underwater. And many of those treasury companies are going to be at negative or under 1 mNAV, right? So that means that at below 1 mNAV, their market cap of their company, the actual market cap of this ticker, is less than the value of their Bitcoin holdings. So, for example, if they get down to a 0.75 mNAV, many shareholders of these companies are going to want to support the share price, and they're going to really demand that the company sell its Bitcoin holdings to buy back its stock to close that gap. So that's going to be a definite thing that's going to happen. On top of that, especially for strategy, let's go over here to these. They've got all these preferreds that they have to pay dividends on. And yes, they've raised some money to help pay those dividends for a period of time, but likely that money that they raised, given Michael Saylor's insistence on maximizing his Bitcoin, I'm going to guess that they start when their MNAV drops below 1. The first thing they're going to do is not sell their Bitcoin. They're going to use that cash to do probably stock buybacks or something else, right, to help support the stock price and make people feel better about it. But likely they're going to go through that cash pretty fast, and eventually they're going to have to probably start paying dividends on these stocks, on the preferred stocks, by issuing more MSTR, which is going to cause an absolute riot amongst strategy holders, MSTR holders. At this time, just imagine how many people are going to be underwater. Because at this point, if Bitcoin's at $40,000, $50,000, strategy is likely was struggling down here mightily at $50-$75, right? People are going to be so underwater, and they're going to be screaming to try to do anything to help. Okay, so then there's probably going to be some sell pressure from the treasury companies. Now, what makes this double bad is the fear of what happens with treasury companies and ETFs, because most of them don't hold their own Bitcoin. Strategies don't hold their own Bitcoin. BlackRock, they all use custody. They all use custodians, right? And so they have to hope the custodian does the right thing. And it may not be apparent for a while that the 110 chain is the right chain. So there's a good chance the custodian sells the 110 chain and keeps the legacy chain. And now you've got a really bad situation on your hands. But they may keep both of them. We don't know what's going to happen. But that's going to create a lot of fear. So I personally think you're going to have a lot of forced selling. But also, so that's going to start to drive this out. Now, when we get the recovery, so let's say we get our typical October, pretend this is October 2026. It's way out here further than that, but let's pretend this is 2026 when we get the bear market bottom. We've got two Bitcoin chains. You've got Bitcoin, and now you've got the 110 chain that's come way down to $5,000 or wherever it comes down to, and we have a recovery. Now we have buyers split between two chains, right? So the recovery is likely to be a very confusing process, and this, because we've got two split chains, this is where I come into, I don't think we get a new all-time high. I think the reputational damage is going to be pretty immense, and the whole time the legacy Bitcoin chain is going to be getting filled up with spam and potentially illegal content. So more and more people are going to start to figure out that maybe they've chosen the wrong chain, and more people are going to start to switch. So I would also roughly predict, I can see the 1-1 chain at least catching from a much lower point of, say, $5,000. Say it starts down here at $5,000, and let's say the main Bitcoin chain bottoms out at 30. I could see the 110 chain nearly catching the legacy chain by the peak of this market. And then we have the next bear market, lower high, the next bear market, and at this point, that's when the legacy Bitcoin chain starts to really tank bad, and then maybe the 110 chain does less bad, right? All through this, we're talking about, at this point, if you've had a lower high, you really have a 6-year bear market on your hands at this point, right? So what does a 6-year bear market do? First, there's a ton of reputational damage. There's going to be a ton of people that are going to be completely decimated because they sold the wrong chain, and only to be holding a Bitcoin that's basically the equivalent of Bitcoin Cash or Bitcoin Satoshi Vision, unknowing to them. Eventually, what will happen is those exchanges will give, when enough time has passed, they're going to give the BTC ticker to the 110 chain and strip it from the legacy chain, is my prediction. I think the 110 chain, that'll be the moment the 110 chain wins, is when all the big exchanges flip BTC to the new chain. And there's going to be a bunch of people that have realized that they were on the wrong side this whole time, and they'll probably exit en masse. After 6 years of not making a new high, you're going to have Strategy, companies like that are going to be in an absolute world of hurt. Imagine Strategy being underwater on their Bitcoin position for 6 years and having to pay dividends on these preferreds for 6 years. By year 1 of them being underwater in their position, they're going to be out of that cash position they built up easily, right? And they're going to be dumping MSTR at rock bottom prices. I would be shocked if MSTR doesn't make it to single digits in this prolonged bear market, right? But they're going to have to start dumping Bitcoin. And when treasury companies become forced sellers as well, it's going to be a very bad bear market. On top of that, again, we have liquidity drying up. Likely the stock market may fare far better than Bitcoin. I'm not going to try to predict any sort of like global 2008 style catastrophic sell-off in stocks. I haven't done that much work to figure out where the bottom would be. I do think, back to the liquidity cycle, I do think for stocks, for NASDAQ, it will be a very harsh, sharp sell-off. I don't want to guess where it's going to go. That I'll take that day by day. But I think it's going to be a very fast recovery. The reason is, for all the reasons, fiscal dominance, the debasement trade, all that stuff is real. It's just timing that. Getting that right as to when that's going to happen, because it is going to happen over the long period of time, but there are credit stress events that are going to happen. So I do think NASDAQ is going to pull back violently into 2026, 7, 8. And then it may not recover immediately, but they're going to have to print like mad. So I could see a situation where we, instead of 10 years, like let's go back here. Let's go back, look at SPX. We had nearly 20 years of sideways at SPX, right? So if you go back, I don't know how many of you are alive remember all this stuff. I was in high school when the 2000.com bubble happened. But from 2000, it wasn't until, you know, 13 years later in 2013 that we finally really retook those highs for good, right? I wouldn't suggest that we're heading for that long, but you know, a couple of years of being under water is very likely. A severe sell-off in stocks that takes several years to recover from is a high likelihood. Possibly even that 6 year. Now that I'm thinking about it, I'm just saying this out loud. That 6 year Bitcoin bear market might actually line up with the stock bear market. All right, so I think that's enough for today. I've kind of covered the three major drivers as I had intended. I've got other thoughts on many other things. Maybe we'll cover in upcoming videos. I do want to cover Nvidia. Just to give you all a quick primer on what I'm doing, I've got shorts open, a small starter position shorting Nvidia as it came back up in here into these moving averages. I do have a modest TLT long position because I do think that with this credit stress, we are going to get long into these rates. You see here the 10 year. I think this is a counter trend bounce, long-term downtrend, counter trend bounce. I do think this wedge resolves the downside because of the incoming credit stress. I don't know how long it's going to last, but I'm pretty sure they can kick this can one more time down the road. But I'm pretty sure we're about to break down here, which down on yields is up on TLT. So I am building a modest, not betting the farm on it, but building a modest position in TLT. And for now, I've done some shorting on Ethereum. I've had a few short scalps to the downside here. I'm waiting for a likely Santa rally. Remember that whole if Bitcoin does bounce back into that 97K level, maybe up to even if we liquidate these lows. I will say this one other thing: if we liquidate these lows, we could get a pretty solid bounce all the way back up to I was looking at 107K. There's a lot of liquidity. There's a ton of liquidity at 97K, but there is a decent amount of liquidity up here at 107K. There was a swing high on this sell-off. I have to look at the daily chart. Yeah, right here. There is some liquidity sitting up here that the market could make a quick, brief, very brief visit of and liquidate that level right there. There's a chance we liquidate that level in a bear market bounce. If we were to do that in Bitcoin, you'd have a pretty decent counter trend rally in Ethereum. I'm currently looking at. I want to build a short position on Ethereum. So my big position going into next year, what I'm looking to build is a pretty large, sizable Ethereum short position. I'm looking at for now. I'll be looking at 3,500. We'll see what price action does there. I was nearly almost started building a starter position, but we never hit the 200 day, and I really wanted to see how price interacted there. But I think if we give it some more time, what I think is going to happen, I think the 100 day is going to pull back here, 200 day is going to start to pull back here, and the 50, if we get a good bounce, like I'm thinking into early next year, after flash down and then the bounce probably similar to Bitcoin. If we get this bounce and we get the 50 curling back up, I would have some nice confluence of the moving averages, price coming back into all the moving averages and this $3,500 level. There's several places. This is an interesting level right here, this weekly. We call this a Heath level, but this was where the market pushed up, had 1 week of pullback and then resumption off of that. That's a good place to look for a counter trend bounce. We got very, very close, but not quite there. I'd look for a more sustainable multi-day test, maybe even a weekly candle or two that closes right around that area. That would make me feel pretty good about, especially if we can get a weekly close there, a red weekly, and then the third week coming back in and retest this fresh weekly resistance that puts in over here. That would make me feel a lot better because I could put a short position on that weekly with a high above the weekly high, the recent weekly high over there would be my ideal setup for this bear market short on Ethereum. But so for me, it'll be shorting Nvidia, shorting Ethereum, and going long TLT is probably my main positions going into next year. But I do want to stay on. I'm going to try my best to start making videos here because I didn't see the point in making videos in the bull market because it's pretty easy trading. There was some fun stuff that happened in the bull market with the tariff tantrum and with the yen carry trade unwind. But for the most part, most people were following us with Discord and X, and I didn't feel the need. But now with this Bitcoin Core V30 BIP 110 chain split incoming, I think now is a time that I can add a lot of value. So hopefully you hang in there with us. It's going to be a rough bear market, but I think we can all pull through. And I think on the other side, there's going to be some great opportunity. Everybody take care. Bye.